Hello, everyone. How's everyone doing today? It's Tuesday, 3 p.m., and we are starting our live stream, Start Smart with Olymp Trade. As always, first, I would like to test the sound and the picture. And today I would like to try something different. If you guys wouldn't mind, if you can hear me and if you can see me well, please type the country that you are from. Bom dia. Hello, hello. So please kindly give me a confirmation that you can see me and that you can hear me well, and then we'll get this party started. Hello, Ethel from Malaysia. Hello, Tony from Indonesia. Kavi from India. Beckley from Nigeria. Oh, wonderful, wonderful. Oh, more Malaysia, India, Bangladesh, Kenya. Lovely. I am very, very, very happy to see Iran, Pakistan, everybody. Thank you so much for this confirmation. Well, now that I know that you can hear me and see me well, I think we should start. I'll go ahead and introduce myself. My name is Angela Gruzdova. I'm a starting financial analyst here with Olymp Trade. I have my live streams on Tuesdays around 3 p.m. GMT plus 3. And my streams are basically focused more for my beginner traders, our newbies. And basically, we go over a lot of basic information. We've gone over horizontal support and resistance, trend lines, and today we are going to speak about Japanese candlesticks, what they mean, and how to determine different patterns on a trend for possible reversals. Nice to meet you, Angelina. Now I'm going to go over some slides and I'll have some descriptions. Then I'll come back to the chat and then we'll actually look for some reversal patterns and candlesticks on our live charts. So just a little history about Japanese candlesticks. The Japanese began using candlestick charts as a financial instrument to trade rice back in the 18th century and were later introduced to the Western world in the 1900s. So just 2 seconds here. Let me adjust this right here. Great. So basically, each candlestick that is displayed on your chart represents the price change within your chosen time frame. So basically, if you have chosen a daily time frame on your chart, each bar is going to show you the price change within that one day. And as you can see on my chart, I have 4 hours. So each bar displays the price change within 4 hours. Japanese candlesticks can be used on any time frame. However, on a higher time frame, candlestick formation and patterns may be more visible. So each candle, forgive me if I said bar. Let's see here. So a Japanese candlestick has 2 parts. We have the body, and the body most often looks like a rectangle or a square. And the second part of the Japanese candlestick is the shadow. The shadow, sometimes you may hear it also being referred to as the tail or the wick. So we have the body and we have the shadow, which is called the wick or the tail. So basically, we can take a peek at our open chart right here. For example, here we have a bullish Japanese candlestick. This long rectangle, the big red part is the solid red part is the body. The body means that the opening price is right here. The candle is moving down. This is the closing price. The top of the shadow means how high the maximum the price reached within those 4 hours, and the bottom of the shadow means how the lowest low that the price reached during that time period. Also, please note, take a look at the bottom left corner of the chart. If you put your cursor on any of the candlesticks, it will show you the opening price the maximum price, the minimum price, and the closing price of that candle. So you don't have to minimize and see when did it open and when did it close. You have all the information right here in your bottom left corner. Let me go ahead and share with you a few slides. So this is basically what we just went over. This is our bullish candlestick. This here, this solid green part is the body, and this is our shadow or wick or tail. So basically what this means is that the price opened right here. And let's say this is our 4-hour time frame, and within 4 hours the price fluctuated and fluctuated and fluctuated, and then eventually it closed right here. So this is why this is our body. But during that 4 hours, this is the price actually reached a high, a max that is right here. This is why this is what our shadows represent, the max and the lows. We have the same situation on a bullish Japanese, excuse me, a bearish Japanese candlestick. So basically, since the candle is moving down, this is our opening price. This is our closing price. This is the max that the price reached, and this is the low that the price has reached. So now that we spoke about Japanese candlesticks, let me go ahead and explain how we use these candlesticks. This is a very important information. So this trading method is based on finding certain candlesticks, candlestick formations and patterns to determine entry and exit points. It could be a pattern, or it could be a single candlestick by itself. The patterns we will discuss today are reversal patterns. So these candles and or these patterns should be watched for at strong support and resistance levels. So basically, you should look for them after a strong movement at the end of a trend. So basically, they can help you determine possible entry and exit points when used in conjunction with other indicators. For example, simple basic horizontal support and resistance levels and local trend lines. So let's go ahead and start with our first pattern. It is called the engulfing pattern. We have the bullish engulfing pattern and we have the bearish engulfing pattern. Basically what we have here is, this is a bullish engulfing pattern. This probably isn't like the best picture, the best image that I could show you, because technically an engulfing pattern means that basically, okay, so for a bullish, first we have a bearish candle followed by a bullish candle that completely engulfs the previous bearish candle. So technically, generally as a rule, the bullish candle should open lower than the bearish candle and close above the bearish candle, so completely engulfing it. If you see this type of candle formation at the end of a downtrend, this could be a good signal for a reversal to the upside. Likewise, we have the same situation with the bearish engulfing pattern. At the end of an uptrend, when we have a bullish candle followed by a bearish candle, it should generally it should open above the bullish candle and close below it, completely engulfing it. Now, at the end of this session, I will go ahead and show you these lovely patterns on live charts. And actually, we're in luck today because I actually found some really good live entry points. Let me go ahead and tell you about the next pattern. It is called the piercing line and dark cloud cover, and they are basically I would call them like a sister of the engulfing pattern, because it works basically the same way. So this is and it's probably a more proper picture. So this is a bullish reversal piercing line. So basically we have a red bar followed by a green bar that opens below the red bar and closes above the midway point, so above 50% of the previous red candle. So this would, at the end of a downtrend as well, would be a possible signal for a reversal to the upside. And likewise, we have the dark cloud cover. Works exactly the same way. At the end of an uptrend, we have a bullish candle followed by a bearish candle that opens above the previous candle and closes below the midway point, so below the 50% line. Could also be a signal for a reversal to the downside. The next thing that the next candle that I would like to tell you about is called the doji. What is the doji? A doji occurs when the market opens and closes at the same price level. It means that the market is undecided and neither the buyers, the bulls, nor the sellers, the bears, are in control of the market. So a doji can look a few different ways. This middle doji means that the opening price and the closing price were at the same exact level. To the left, we have a slightly bullish doji, and basically, forget the bullish and bearish. Basically, these are all dojis. Rarely will you see, not rarely, but a lot of times you'll see that the doji opens and closes at almost the same level, and so basically may be displayed as slightly green or slightly red. They are still dojis. So this is undecision on the market. So nobody's in control. Alrighty, so I have another part of the doji, and it is called the dragonfly and gravestone doji. So basically this this kind of candle represents strong price rejection, and this is important, and this is a actually serves as a good signal when you see it at the end of a trend. So a dragonfly doji occurs when the opening and closing price is at the same level, but with a longer lower wick. So basically, it's a bullish doji rejection of lower prices. So and once again, this green line could be just regular black, or it could be open and close at about the same level. So what happens is the price opens and the sellers came in, the bears came in, they tried to push the price down, but the bears came in, but the bulls came back in, and they were like, oh, no, and they pushed the price right back up and closed at about the same level. So this shows a strong rejection of lower prices. Just like likewise with the gravestone doji, so this is shows strength for the bears, for example. So the price opened, so the bulls came in, they tried to push the price higher, but the bears said, oh, no, and pushed the price right back down and closed at about the same level. So this just remember, key takeaway, it's a strong sign of price rejection. And if you see this at the end of an so basically this, if you see this at the end of an uptrend, or if you see this at the bottom of a downtrend, somewhere near your support and resistance levels, could be a good potential entry point. Alright, so we have our dragonfly and gravestone doji. The next part, I like the next part. It's funny. We have the hammer, the inverted hammer. We have the hanging man, and we have the shooting star. And oh my goodness, I don't even know how I'm going to remember all of this. And do I really need to remember all of this? My suggestion is no, and I'm going to tell you even more. All of these candles can also have another additional name to them. It's called a pin bar. Once again, I would like to suggest for you not to really focus too much on the names and the memorizing of them. A lot of times, a lot of people will simply just refer to this as a hammer or a pin bar. It's just a lot more simple this way, I believe, because as you can see, the hammer can be either with a long wick to the downside, or a long wick to the upside, and it can be red or it can be green. It really just depends on where it's located on the trend. And another important thing is that you will encounter these candles. You can actually see them during a trend. So you have to remember about your support and resistance levels so that you know when it's reaching that support or resistance level. That is when you want to look for these candles for a possible confirmation of a reversal. So key takeaway here is price rejection. So for example, this could be a bullish hammer if it is located at the bottom of a downtrend. So basically what it means is that the bears came in, they tried to push the price lower, but the bulls came in, the bulls came in, they pushed it back up, and the price closed up above. So this is a sign of bullish strength. Likewise, this is also a sign of bullish strength. Why? Because we see that the bears are losing their momentum. They're not making lower lows, but we do see that the bulls are trying to push the price up. And likewise, we have the same scenario, but for the bears. So basically, here we see that the bulls are losing momentum and the bears are gaining momentum, pushing the price down. And here the bulls were trying to push the price higher, but the bears rejected the higher prices. So this is also a bearish strength. So key takeaway here: hammer, pin bar, and just focus on price rejection and definitely where these candles are located on the chart. All right, what do we have? What do I have next for you? Next, I have the morning and evening star. A morning star candlesticks are seen at the bottom of a downtrend. It's a reversal pattern to the upside. So in a morning star, the first candle is bearish. The second candle has a small body. Now, just please try to remember that the second small body, it does not matter if it's a bullish or bearish candle. The fact of the matter is that it has a small body. Oftentimes, the morning and evening star is also accompanied by a gap. So sometimes you will see that the small body is somewhere lower than the first bearish bar. And then the third body is bullish that closes within the first candle. It opens below the first candle and closes within the first candle, preferably above the halfway point. So this would be a morning star, and likewise we have the same scenario for the evening star, just a bearish counterpart. We have our first our first candle will be bullish. Second candle will have a small body. It does not matter if it's bullish or bearish. And the third candle will open above the first candle and close within the first candle, preferably below the midway point. This is a possible reversal to the downside. Just please do remember that we keep at the end of a trend. And also the morning and evening star with the small body, they can be accompanied by a doji. So this is a morning doji star, a reversal to the upside, and this is an evening doji star, a reversal to the downside. One thing that I do apologize, I forgot to mention before we jump to our live charts and find these patterns is the bullish engulfing. The thing that I forgot to mention is that the shadow does not matter in this for this pattern. This pattern depends solely on the body of the candle. So generally speaking, the body should so the price should open below this red candle and close above it, completely engulfing it with the body. So when we're looking at bullish engulfing and piercing lines, we are looking only at the bodies and not at the shadows. Alrighty, so let me go ahead and check the chat. How is everybody doing? Let's see here. Okay, I do see a lot of questions about withdrawals and deposits. Yes, indeed, it would be best if you can contact our support. Our representatives are always happy to assist you. They would be able to give you the best and updated information. You can go to the upper right corner and click on the little question mark and contact our support team. Hello from Iran. I do see some writing that's not in English. Unfortunately, I don't understand. I'm sorry. Let's see here. Okay. Hello, mademoiselle. Hello, Admiral Lufu. Alrighty. Well, I see that everybody is doing okay. And can you show how to find support and resistance? I will show you them on my live on a live chart, but you can also look in our live stream history. I did support and resistance levels 2 weeks ago, and you can actually just view the video if you would like to. Okay, let's see here. What we're going to do now is look for the patterns. Now, we are going to start with USDCHF. I have here a 4-hour time frame, and this is coming live. This is a bullish engulfing. As you can see, it is located at the end of a downtrend, and I do see here, let's see here, and I drew this support level as a new low that the price has reached. I also drew a trend line from from the second bearish candle, and I connected, and just remember your support and resistance as well as trend lines should have as many touches as possible without actually breaking the line. So the more touches it has, the more the better the more supporting it is, the better it is. So basically, right here we have a fantastic breaking of the trend line to the upside, and this is a confirmation that it completely engulfed the previous bearish candle. So this is our bullish engulfing. Now on this same chart on USDCHF, I'm going to go ahead and switch to our daily time frame. Daily time frame. Alrighty, just a little bit back in history. And here I have for you an example of a morning star. As you can see, it follows a strong downtrend. I also have drawn myself a support level. Now you can also confirm the support level by, you see how the price respected the support level here. It supported the this area here, so I know that this is a strong support level. So this is just an additional confirmation. Excuse me. Well, it's okay. We don't need that one anymore. So we have a strong downtrend. We have a, I hope you can see it. So the price opened below the first candle and closed within the first candle, and it closed above the midway point. Also, we have the middle candle is a small body candle, and I'd like to tell you another thing. What we have here, we have strong rejection of lower prices. So we have this is a bullish hammer. Okay, so this is showing that the bulls are gaining momentum, because the bears tried to push the price lower, but the bulls came in and they fought their way up. So excuse me. So on this chart, we've seen a morning star, a hammer, and a bullish engulfing. Now let's go ahead and switch to our next chart. I have here the Australian dollar against the US dollar. Here I would like to show you a bearish engulfing pattern. It is following an uptrend, and as you can see, the price opened above the previous green bar and closed below the previous green bar. So it completely engulfs it, and it set off a downtrend. I do have here a resistance level, but it is just connecting some local, as you can see how it's supported here and it's supported here. It doesn't have to, I know it doesn't have like ideal touches, but just remember this price level, we're not going to treat this exact price as our support and resistance. We're going to use this area as our support and resistance. So on this chart, we have a nice picture of a bearish engulfing. Now you see the shadow, I'm not considering the shadow as I mentioned. The only thing that we're focusing on engulfing patterns is the body of the candle. Alrighty, so for our next example, I have CHFJPY 4-hour time frame live is showing us a gravestone doji reversal. And you know, actually, dragonfly and greystone dojis, I find them to be somewhat rare, and I'm just so excited to have this this pattern live that I can show you. So I'm really excited about that. So our 4-hour time frame shows a nice bullish trend, and we see that. Right here we see a gravestone doji. This shows us that the bears are gaining momentum. And actually, technically, what I would like to mention is, you see this long shadow here and another long shadow here. This can actually kind of tell us that this is a double price rejection. So it's a really nice, strong signal that the trend is reversing to the downside. So here we have a greystone doji. What do we have next? I have the British pound and CHF. Give me just 2 seconds here. I wanted to show you an evening star. Okay, let me go ahead and explain my levels. I have a nice level of resistance here. I see that the price has respected this price level certain times in the past. And then I see a strong bearish trend. But locally, and this is our daily time frame, we do see a bullish trend here. And then we see a green bar followed by a small bar. Excuse me, I keep saying bar, forgive me. A bar is a completely different chart display other than candlestick. I beg your forgiveness. Candle. So we have a big green candle followed by a small body candle and then a red candle that opened above the first candle and closed within the first candle, and it closed above or at around the midway point, and it initiated a nice downtrend. So this is an evening star. Well, I have run out of examples for you today. Let me go ahead and check the chat one more time. Let me see here. This is the truth. Okay, bullish hammer. Let's see here. The pattern of evening and morning star. Yes, Deepak, I did show them. Let's see here. And by the way, this video will be uploaded on our YouTube channel, so you can if you joined us a little bit later in the video, you can definitely, of course, rewatch it from the start. Let's see here. Yes, you can use a 1-minute time frame. Like I said, you can use Japanese candlesticks on any time frame, but on a higher time frame, the patterns may be a little bit more visible and a little bit more clear. Alrighty, well, ladies and gentlemen, I had a really great time with you today. I really hope that you enjoyed my stream. I hope that I gave you some valuable information. Um, Please do give me your support. Give me a thumbs up if you liked this stream. Give me a thumbs down if you don't like it. You know, negative feedback is still feedback, and I appreciate each and every single one of you. Thank you so much for letting me know. Please make sure that you are signed up to our YouTube channel so that you don't miss any of our live streams. And well, my friends, I am going to see you next week. Thank you so much for joining me today. Bye.